Hello, my name is Ariel Lynch, and thank you for joining our refresher course on calculating broker commission. In the dynamic world of brokerage, understanding how to calculate commission is essential in successfully entering adjustments. So let's dive in and discuss the ins and outs of broker commission calculations. During our time together, I will cover the fundamentals of broker commission. I will also walk you through the calculation process step by step, ensuring you leave with a clear understanding of how to accurately calculate broker commission in real world scenarios. You may be asking what is a broker load? So, instead of using the leased on truck with their agency, agents can use an outside carrier or broker that has been approved to move freight within Evans. These are called broker loads. Agents can also use another agent within the Evans network to move a load for them, and those broker loads are intercompany moves. Once a carrier is approved to move freight with Evans, the carrier will be assigned a unique identifier called a V code. V codes are like driver numbers. Evans uses the assigned V codes to pay the carrier for their services. A carrier's V code can be found in the agent portal in the financial information once you retrieve the order. And keep in mind, just as we have to get confirmation from the agent before deducting the driver, always make sure you confirm if a carrier should be deducted before processing an adjustment. As you will find, a lot of times the errors are not the carrier's fault, and the agent would take that deduction so they can honor the rate that they agreed with a carrier. So always make sure you are confirming with an agent before you deduct a carrier. Determining whether a load was run by an Evans truck or a carrier is very simple and can be done in one of the three following ways. You can search the load in Aurora, the agent portal, or EBH. First up is Aurora. So let's dive in and check out how to identify a broker load. So first we're going to start off by typing BINQ in our quick access code box. This is our shortcut for the bill inquiry. Once you're on this screen, you want to type in the pro number and click enter. From here, you'll be taken to the bill detailed where we can see in this first column at the bottom, there's no driver information for the pickup driver and delivery driver. That information is blank on broker loads. To see the broker details, we want to go up and click more info. And if we scroll to the middle of this page, we'll see our broker information box. So we can see the account is always titled broker. We'll see the amount that was paid to that broker, and we also get a payment date for that payment. Now that we've identified a broker load in Aurora, let's check out a broker load in the agent portal. We are going to log into the agent portal as GDE because that is the pro number that we're looking up. It's easier in this case to log in as the agent instead of doing a corp login. It's just quicker to search that way since we have all the information. So first we're going to click operations, then billing, and then at the top right hand corner at the end, we're going to select retrieve order. Here we'll just enter in the digits of the pro number because we're logged in as GDE. We don't have to enter any more information. So it's retrieve the order. So we're going to scroll down to financial information. Here under independent contractor is where we can tell who got paid for this load. So right under tractor one, we can see a V code. This is what a V code looks like. So we can see a carrier got paid for this move. If a driver were to be paid, you would see a driver number. But anytime you see a V, that means a carrier got paid for the amounts you see listed under that V code. And see here at the bottom, they were paid a total of $511.75. Last but certainly not least, let's check out the Evans Business Hub, better known as EBH. So we want to go ahead and sign into EBH. Once we're signed in, select corporate. From corporate at the top right, we're going to select settlements. And from settlements, we're going to select agent settlement inquiry. We want to go ahead and check our all date ranges box. For the order number, we're going to enter in our pro number with no spaces. Once your pro number is entered, scroll over to the right and click search. So to identify a broker load, you check out your pay code. All brokered loads pay codes are BR. So anything under BR was brokered pay. Our driver pay is now the carrier's pay. So the carrier was paid $511.75 and the agent received $67.35. So always remember, if you're looking at line items in EBH and you see BR as a pay code, that means this load was brokered. To recap what we just went over, just remember that brokered loads can be identified in one of the three following ways. So first we looked at Aurora. So we pulled up that pro and we looked at the bill details. We didn't see any drivers listed, so we clicked the more info tab and we were brought to this broker information here. The second place we checked was the agent portal. We retrieved the order, scrolled down to the independent contractor pay, and that's where we saw a V code being paid. And remember, our V codes are our carrier codes. So we were able to confirm once more that this is a brokered load. And then last, we logged into EBH and we pulled the agent settlement inquiry and we saw BR as the pay code, and BR is the pay code for brokered loads in EBH. And we saw our driver pay, which is carrier pay when loads are brokered. So always remember that if you're looking for the carrier pay in EBH, it's located under driver pay. And if you look at all three platforms, they show the carrier receiving the same amount. So we can confirm that this load was brokered and the carrier was paid $511.75. So let's talk mixed commission. In addition to using a leased owned truck with their agency, an agent can also use an outside carrier or broker to move the load. These are called mixed commission loads because an agent, a driver, and a carrier will receive commission for their part of moving that load. So it's just like a broker load, except for we're adding in an Evans driver. Mixed commission loads are just like broker loads. The only difference is we're adding in an Evans or West driver. These loads can also be identified in the same way. So first we're going to check out what a mixed commission load may look like in a war. So first we're going to need to pull up that pro. So we're going to use bill inquiry in order to do so. Once you enter in your pro number, you can click search or the enter key. So now we're on the bill detail page. So as you can see here, if we go down to that bottom left hand corner, we can see a pickup driver number and also a delivery driver number. So we know two drivers were involved on this load, and we also have broker information on the more info tab. So we can also see that a broker was paid on this load. So this is showing us what mixed commission looks like in a war. We have broker information and we also have driver information. And yes, you guessed it. If we could see a brokered load in the agent portal, we can also see a mixed commission load in the agent portal. So let's log in. So we're going to go ahead and log into the agent portal as ADZ. It's easier to log in with that agent code instead of the corp login. Once we're logged in from the main menu, we want to select operations, then billing, and at the top right hand corner, click retrieve order. In this pop-up box, enter the digits of the pro number, click go. Once the order is retrieved, we're able to scroll down and check out the financial information for this load. So under independent contractor, we can see tractor one was paid as a driver, tractor two is a V code, so that's a carrier, and tractor three is another driver. If you click more tractors, you can see if anyone else is paid, but no one was because these are blank. So we can go back. So here we're seeing two drivers paid and one carrier. At the bottom, we can see a total of what they were paid. And if you go back up a little bit, you can see which line items they were paid on. So here we were able to confirm that two drivers and one carrier, RV code, received commission on this load. So that's what makes this broker load mixed commission, is because two drivers and one carrier is getting paid versus with a broker load, only a broker slash carrier or an agent is receiving commission. But in this case, we're going to have four parties getting commission. So that's two drivers, the carrier, and later on we'll see what the agent got paid. We just saw what a mixed commission load looks like in the agent portal in Award, so let's log into EBH to check it out from that end. So we're going to go ahead and log into EBH. Once you're signed in, click Corporate. Next, click Settlements in the top right, and then in the middle, click Agent Settlement Inquiry. You want to make sure your all date ranges box is checked, and in the order number box, we're going to enter in our pro number that we want to look up. Once your pro number is typed, go ahead and click Search. Once the screen loads, we're going to see our agent settlement inquiry details. So if we look in our pay code, we can see there's a lot of different pay codes, but we also still see that BR. So that BR lets us know that this was a brokered load, but since we have all these different pay codes like TOC for terminal owned chassis, FRT for freight, FSC for fuel, that shows us that additional parties were paid. So not only was a carrier paid on this load, but we can see that maybe some drivers were paid. And we already know because we looked in the agent portal that other drivers received commission on this. So this is what a mixed commission broker load will look like in EBH. In addition to seeing that BR pay code, you're going to see pay codes for other line items that were billed on this invoice. And that's because drivers were also paid for their portion of the move. There's a great tool for collectors to use in EBH to assist you when you're calculating your adjustments, and that wonderful tool is called Commission Pay Tables. Please ensure that you are using the correct formulas and calculations based on the pay type and the percentages for each adjustment you enter. When viewing EBH agent commission maintenance tables, pay close attention to the formula column for the line item that you are adjusting. Each formula calculates differently based on that individual agent's contracted rates with Evans or West. So we're going to log back into EBH to check out these pay tables. So select corporate. From corporate, click settlements. And from settlements, click agent commission maintenance. This is password protected. The password is ECOMAT. You can have your caps lock on or off as it's not case sensitive. So now we're at the agent commission maintenance page. From here, you can check any agent under the network of Evans. You can scroll and find them, type their name. For now, we're just going to click the first ones we see here, which is ABC. So once the screen is done loading, it will show you all the line items this agent can bill for. So you'll get the pay code, a description of that pay code, and then the formula that shows what they're paid out. Are they deducted? What's their pay percent? And what formula is used? So as we keep scrolling, we'll see more formulas show up, different percentages. You may see some that pay on a residual, like chassis. Typically, daily chassis charges pay on a residual. And if you scroll down, you'll see that in that formula column, and you'll also see a box checked under exclude broker. So that means this charge is not included in the BR pay code. You would see this charge listed separately. So that's what it means when you see that box checked under the exclude from broker column. So as you scroll, you'll be able to continue to see payouts for this agent. If you see something that is zeroed out, that means this agent doesn't bill those charges. So that's why there's no commission pay set up. So again, each time you're making adjustments, whether you're paying an agent or making a deduction, make sure you're using these pay tables to ensure that you are paying or deducting the correct amounts. The BR pay code for broker commission pays under the formula all split as shown below. All split is only used for broker loads where every accessorial code rolls up into the total charges except those lines checked exclude broker. Carrier pay is subtracted from the total charges and the remaining revenue is split between the agent and Evans. Revenue is split between the agent and Evans based on the agreed percent in EBH. Most broker loads pay 60% agent and 40% Evans split. So that is why it is very important that you are going into those commission pay tables and confirming how much an agent receives for broker loads. Just because it is stated that most pay at 60, not all of them do. So just make sure you're getting in the habit of checking for those formulas so you're making sure that your adjustments are accurate. When broker loads are paid to a carrier, this means the agent's commission was paid out on the margin. When calculating an agent's broker commission percentage, use this formula. Revenue minus carrier pay equals the margin. Broker commission is agent pay divided by the margin. So, for example, we're going to take the revenue of $624 and subtract the carrier's pay. Once we do that, we'll end up with the agent's margin. So the agent's margin is $112.25. So now we want to know, what is this broker commission percentage? So we're going to take the agent's pay and divide it by our margin, and we get a 60% commission payout. So GDE's broker commission percent is 60%. So that means this agent receives 60% of the margin. So don't think of it as, oh, if I had to make a deduction, I'm going to deduct them 60% of the revenue. You have to remember that the agent's commission is based on the margin. So you won't be deducting 60% of that billed revenue of 624. Their payout is based on the margin. So we would deduct or pay based on that margin. So you can see that this agent received 60% of the margin billed, and Evans got the remaining 40%. Okay, so I know what you're thinking. Didn't you show us somewhere in EBH where we can look at this? Why do I need to do the math? You're right. Like we looked at before, we can log into the agent commission maintenance. Make sure you're entering in that password of ECOMAT, ECOMAT. Once we're logged in, we're going to go ahead to our agent code box and type in GDE. Wait for our results to load. Sometimes you just have to give it some time because it may freeze on you. We're going to scroll down and confirm if that broker commission matches that math we just previously did. And it does. As you can see, we found the BR pay code, our description, broker commission, and here it is, all split 60%. So we have just confirmed that our math is right, that this agent receives 60% of the margin for broker loads. So if you're not that math savvy, make sure you're logging into EBH and using those commission tables, because they've done the math for you and you can skip all those steps. But if you want to be able to check the math that you've done or EBH goes down, you have that formula to be able to figure out what an agent's broker commission is. Here comes the fun. Let's walk through some broker commission adjustments together. When processing carrier deductions, it's very important to remember that brokered loads represent loads that were hauled for a contracted rate. That means the agent and the carrier has agreed to a certain amount of money that that carrier will be owed for moving that load. Therefore, we should only deduct the carrier if certain circumstances arise. Our first would be a pay correction. If an agent has notified the collector that the carrier's pay was entered incorrectly and an adjustment is needed, that carrier would be deducted per the agent. So the agent would have to provide that amount that they want the collector to adjust the carrier's pay. Our second circumstance would be a service failure. Customer short pay or chargeback on an invoice due to a service failure or fees directly associated with the carrier's action. This would be demurrage, per diem, late fees, etc. These are deducted at 100%. So this is no different than service failures on a regular load. All service failures are deducted at 100%. And last would be a duplicate invoice. Your customer may come to you and say they've already paid these charges. Can you cancel this? You've confirmed with the agent that it is a duplicate. The last thing you have to do is check with carrier pay, because we want to make sure that the carrier was paid twice before we deduct. If they were, we will deduct the carrier as paid. It's important to also note, in all cases, the agent must advise to deduct the carrier's commission before a deduction is entered. So this is just like the drivers. We want to make sure the agent wants the carrier's commission adjusted before you enter these deductions. Because like I stated before, these are contracted rates. So we want to make sure that the agent is aware and approves the carrier to be deducted before you're processing those adjustments. So let's go over a pay correction example. Per NBZ, the carrier should have been paid $215 on NBZ 109370 and would like their pay adjusted. So first we'll log into EBH and we can see here that the carrier received $250 on this load. If you logged into the agent portal, you would also see that same information here at the bottom of the screen. We can see both have our revenue at 385 and the carrier received $250. But per our email from NBZ, they were overpaid, so we need to make that adjustment. And always keep in mind if you are changing the carrier's pay, whether up or down, that means you're changing the agent's commission up or down. So in this scenario, we're decreasing the carrier's pay. So that means we need to increase the agent's pay. And to do so, we're going to use this nice template that was provided by Kat. If you are interested in using this template after you watch this video, please reach out to me and I am more than happy to share it with you and explain it any further if you have any additional questions after you've seen it used here. So first we're going to start with our build charges. So we know our total revenue for this load was $385. Our carrier was paid $250, which gave us a margin of $135. And of that, the agent received 65%, which was 87.75. And if you're wondering, hey, where did you get these numbers? I didn't see you go look anywhere else. Remember the formula that we created earlier. Taking our revenue and subtracting our carrier pay will give us our margin. From EBH, we take our agent's pay divided by our margin, and that's how we got the 65%. So now we're going to start with our adjusted charges. So we're not changing the revenue because per that email, we're only changing the carrier's pay. So we're going to enter 385 again for the revenue because there's nothing changing here. However, we are going to update our carrier pay from 250. We're going to put in 215 because that is the amount the agent said they should be paid. Now you can see our margin has gone up $35. So since we decreased our carrier's pay, now our margin has gone up, which means the agent would receive more commission because now they're getting 65% of 170 instead of 65% of 135. So now we can see our difference here. There's no change to our revenue, so we have a zero total there. Our carrier pay is a difference of $35. And you can see our margin has gone up $35. And we see now we have a credited amount. So what does this mean? What are we seeing here? This is what we're seeing. There's no adjusted amount on the invoice, but now we know we need to deduct that carrier $35 because they were overpaid. And in doing so, now we need to increase that agent's commission by $22.75. So on your screen, you should now see an example of what this would look like in the chargeback system. We have two deduction types here because number one, we need to reimburse the agent while we enter this deduction for the carrier. So we have our first line for MBZ where we're crediting them back $22.75. And then on our second type, we are adjusting the carrier's pay. So you want to make sure you have the carrier type selected. You're going to enter in their V code. And remember, their V code is found in the agent portal once you retrieve that order. And then we want to go ahead and enter our deduction amounts. Down at the bottom, we only have a deduction date because we're not adjusting any charges on the invoice. So we also won't have instructions to the cash team or an adjustment amount. Up next, service failures. So, for an example, per Best Choice Products, the carrier missed the delivery date and cost them an additional $100 in storage. Due to the storage charges, they will be short paying MBZ 109 370 by $100. After you receive this information, you posted it on the ARVP and the agent has advised for you to deduct the carrier. So as we stated before, service failures are deducted at 100%, so these are very easy to calculate. We have the short pay of $100 times 100% equals a $100 carrier deduction. So let's go over deducting as paid. Per Best Choice Products, MBZ 109370 is a duplicate of MBZ 109350. The agent has confirmed it was a duplicate invoice and has advised to deduct as paid. EBH and carrier pay also confirmed that the carrier was paid twice. So these are the easiest deductions, almost just as easy as a service failure because there's no math for you to do. Once you log into EBH and pull up that agent settlement, you'll see the pay broken down here. And since we're deducting as paid, we're going to deduct the carrier $250, and then we're going to deduct the agent $87.75. Because we're canceling this whole invoice, we're deducting as paid. There's no fancy math or calculators you have to use. You just need to deduct the amounts that you see in EBH. So now that we covered the three different scenarios in which a carrier would be deducted and how to figure out those calculations, let's check out the agent side. In this example, the customer has disputed the second repo split chassis fee. The agent has approved for the invoice to be revised to remove the charge and to deduct the agent. To determine the deduction amount for the agent, we'll need to use EBH. Once we log in, we want to check ADP's commission pay table for their broker commission percent and the agent settlement inquiry. So we've logged into EBH and we pulled the agent settlement inquiry, and we can see here our pay code is BR. So we know all of the charges that were billed on this invoice were wrapped under this BR pay code. We get our carrier pay in the driver pays column because since this is a brokered load, no drivers were paid. So our carrier pay is listed under driver pay. And our commission column is our agent's pay. So now we want to use our agent commission table to figure out what does this broker code pay out? What is their percent? And is the formula all split like it should be? So once we pull up that table, we can see that ADP receives 60% on the all split for the brokered pay code. So we can make a note of that as we're going through and processing our adjustment. The agent has decided to take the deduction for overbilling the repo split chassis fee. We will use their broker commission percent found in EBH to determine their deduction amount. So we're going to take the $150, which was one of those repo split chassis fees, and we're going to multiply it by 60%, which was the broker commission percent we found in EBH, and it'll give us a $90 agent deduction. So because we have decreased the revenue by $150, we multiplied that by their payout of 60%, and that's how we got our $90 agent deduction. I'll also show you what it will look like if we use the all split calculation because I know some people are more visual and seeing it all broken down helps you retain the information better. So we're going to take our all split calculation. We're going to use our build charges. So our revenue was 1045. The carrier was paid $775, which gives us a margin of $270, and our agent commission of $162. Next, we have our adjusted charges. So we have removed one of those repo split chassis fees. So that was $150. So now we have a new revenue of $895. The agent has advised that they're taking this deduction, so there's no change to the carrier's pay. But however, you can now see that we have a change in our margin and a change in our agent's commission. And why? That's because we have decreased the revenue. So now we can see our difference. We have that difference of 150 in our revenue, no change to the carrier's pay, but now we have a change in the margin of $150. So we multiply that by our agent's broker commission percent of $60 and we get that same $90 deduction. So we know now the agent is being deducted $90 for decreasing the revenue by $150. So it's very important to remember that we're not going by our line items here. We're strictly just going off of the revenue when we're handling these agent deductions for broker loads. Always note if the difference is more than what the agent was originally paid, only deduct what the agent was paid. Agents do not share in the loss on brokered moves. So, for instance, In this example, we're deducting $90 and the agent originally had 162, so we are below. So we are fine to do $90. But if the agent only received $50 in commission and our deduction amount is now $90, we would only deduct the $50. We never want to deduct an agent for more than what they received on the load. So always make sure you're double checking your amounts before you're entering in your adjustments. And on your screen, you should now see an example of what this would look like in the chargeback system. We only have one deduction type, and that is the agent because they only advise to agent deduct, so we don't have any carrier deductions here. We also will not have an adjustment date amount or instructions because we revise the invoice and remove the charge ourselves. Now that you have the formula for brokered commission adjustments, let's take a look at mixed commission adjustments. And keep in mind, mixed commission loads are still brokered loads. The only difference is now we have added an additional party to the mix, which is typically a driver being paid. And we all know how to do driver deductions. So there's nothing new you're learning here. You just have to remember to include the broker commission formula that we learned earlier. So that's the only difference with doing a mixed commission load. The adjustment steps are still the same, they just look a little wonky sometimes. So let's get into it. In our next example, the customer has short paid 9 days of chassis. After checking the equipment console, we confirmed evidence was not billed for chassis and the agent has approved the short pay and advised it should be deducted as paid. To determine which party received commission and how much, we will need to use EBH in the agent portal. We'll use the agent portal to retrieve the order and determine which carrier code was paid and how much. We'll log into EBH to review the agent settlement inquiry. We'll also check ADC's commission pay table for their broker commission percent and their payout for terminal owned chassis. So we just logged into EBH and we pulled up our agent settlement inquiry and we can see a lot of pay codes here. So our agent settlement inquiry displays the total amounts that were paid to the agent, carriers, and driver. As we can see here, we have our BR pay code, so we know that this was a brokered load, but we also have additional pay codes listed. This is how we know that this was a mixed commission load. So outside of that BR broker pay code paying out, there were parties who received commission on other line items on this invoice, so this is why it's called mixed commission. So now that we know we're dealing with the terminal owned chassis line item and the broker line item, we want to go ahead and pull up this agent's commission pay table so we can see what their payout is for those two items. So we have our commission pay table up and we can see that this agent receives 60% of the all split formula for brokered loads and 100% of any revenue billed for terminal owned chassis. So we've logged into the agent portal so we can see if a party received any commission payout for chassis. So if we look down here at the bottom of the screen, we can see chassis billed here 9 days at $35 a day for a total of $315. But under independent contractor pay, we don't see any payout. So we can confirm here that the drivers and the carrier did not receive any commission for chassis. Now that we know the parties that need to be deducted, we need to figure out our adjustment amounts. So we want to go back into the agent settlement inquiry and start from there. So we're looking at our terminal owned chassis line here, and we see revenue for $79.07. And you're probably thinking, now, wait a minute. I could have sworn I saw $315 in award. And you're right. $315 was billed for terminal owned chassis. So you're probably saying, where's the rest of the chassis revenue? That's a great question. And we're going to answer it too. The rest of the chassis revenue is in the brokered amount. I know I can hear your thoughts. You're thinking, oh, what is this brokered amount? where did that even come from? I don't see any line item in award that lists this amount. So let's take a step back and figure out how did we get this brokered amount. So we're going to take each line item that's billed here in Aurora. We're going to put that revenue amount that's billed in Aurora with that line item. So now you can see we have freight for $900, just like we have in Aurora, and so forth. Next, we're going to take our revenue amount that was listed in EBH and subtract that from the revenue billed. So now we have our revenue paid out column. So this is our revenue column from EBH. So we have our freight, $900 that was billed on our invoice, and we're going to subtract the freight revenue that's listed in EBH, that $225.90. When we subtract that amount from our billed revenue, we get our brokered amount. So now we know each portion of each line item that is tied to that brokered amount. And if you see, we get the same totals here. It is off by a couple of cents, and sometimes you may see that with mixed commission loads because how the system may round it up. They may use their numbers out further. So sometimes it could be a couple of cents off, but we're not too worried about that because we can see our numbers are pretty much a match here. So this is where this brokered amount came from. By subtracting the revenue billed in award by the revenue listed in EBH, we were able to get that brokered amount. So if we take our broker revenue and we subtract our carrier pay, we get, sorry, $1,089.82. That is our margin. We take the margin and times it by that broker's commission percent that we found on that pay table earlier, and this equals the agent's commission, which is the same number you see here in EBH. So that's how all those numbers came to play. So that's where our remaining money for that revenue build for the terminal owned chassis fee is tied into that broker amount. So the agent received commission under the TOC pay code for chassis, but they also received commission under the BR pay code as part of the broker revenue. To calculate this agent's deduction, we're going to start with determining how much of our terminal owned chassis fee is tied into this broker amount. So we're going to start by taking the revenue billed, which was $315. We're going to subtract the TOC revenue that was listed in EBH. So we're going to subtract $79.07, and that is going to give us our brokered amount. This is also our margin. So we have our margin listed here. We can determine how much the agent received for commission for the terminal chassis that is tied into the broker rate. So we're going to take that margin and we're going to times it by that broker's percent, which is 60%. And now we have our agent commission pay. So out of this $653.89, the agent received $141.56 for terminal owned chassis. So now that we have the broker commission, now we can calculate the agent's full deduction for this chassis charge. So we're going to take the amount they received from the brokered revenue. We're going to add it to the commission that they received under TOC. So as you can see there, they received $79.06. So we're going to add that to our broker commission that the agent received, and this will give us the agent's total deduction amount. The agent will be deducted $220.62 because remember, any commission paid out for a line item will need to be deducted if Evans is not going to collect it from the customer. So we want to also include the amount they got paid under TOC and the amount that they got paid under the BR pay code. And on your screen, you should see an example of what that chargeback entry would look like. We're going to jump down to the deduction types, and you see we only have one deduction type on this scenario, and that's because the agent was the only party that received commission, so there will be no other deduction types. Even though this was mixed commission and we had drivers and we had a carrier, but as we confirmed in the agent portal, none of those parties received commission for chassis, only the agent. So they're the only ones that will be getting deducted here. So we have our deduction date 2 Mondays out On this scenario, we do have an adjustment amount and a date because we want to cancel this balance from the invoice. So since the customer will not be paying the 9 days bill for $315, we have that as our adjustment amount, and our instructions to the cash team is to cancel the balance. Let's check out another example of a type of mixed commission load. We can see here in Aurora that we know we're looking at a broker load and we know we're looking at a mixed commission load, but we don't see any driver information down there listed by pickup driver or delivery driver. So you're probably asking, well, how is this a mixed commission load if another driver wasn't paid? That's a good question. Let's log into the agent portal and find out. So once we get into the agent portal and we're looking at the independent contractor pay, we can see here that there were 3 tractors paid. We have 2 V codes listed here and then an agent code. Ooh, that's different. So instead of this being another driver that was paid, this agent, QPC, paid LNS directly. So instead of paying one of their drivers, they paid the agent. So this is how this is a mixed commission load because we have carriers being paid in addition to another agent. And once you log into EBH, you'll see that same information here. We have the BR pay code, but then we also see this LNS agent code being paid as a location. So this is what makes this mixed commission. Instead of it being another driver being paid, another agency is being paid. In our next example, per the rate con on file, line haul was overbilled by $50. The agent approved the $50 short pay and advised to deduct the agent. To determine the agent's deduction, we'll need to use EBH. We will log in to check QPC's commission pay table for their broker commission percent and the agent settlement inquiry. So we logged into EBH so we can pull our agent settlement inquiry. Our agent settlement inquiry is showing us a breakdown of all of the amounts that were paid to the agent, the carrier, and to the other agent on this load, which is LNS. So we know we're focusing on the freight line. When we see freight here, there's no revenue for that pay code. So we know all of the freight billed on this invoice is tied into the broker amount. So since we know we're only dealing with the broker amount, when we pull this agent's commission pay table, we're only looking to see how much they get paid for broker commission. So once we pull that pay table, we can see QPC's broker commission pay is 60% and it's all split. Now that we have the agent's broker commission rate, we can calculate the deduction for the $50 short pay. So we're going to take our $50 short paid amount. This is our $50 change in our revenue for this invoice and multiply it by this agent's broker commission percent of 60, which will equal a $30 agent deduction. So remember, since we are decreasing the revenue we're receiving on this invoice by $50, that is the amount we want to multiply with that agent's broker commission percent to get their total deduction. On your screen, you should see an example of what this would look like in the chargeback system. We only have that one type being deducted because the agent did not advise to adjust the carrier's pay. They are taking the hit for overbilling the freight. So that's why we only have that one deduction type. And on this example, we will have an adjustment date, an adjustment amount, and instructions to the cash team because we need that $50 short paid balance to be canceled. So before we wrap up our mixed commission adjustments, let's take a look at what the scenario would be if we had to deduct a driver. Anything outside of the BR pay code is deducted just as a regular adjustment. We are only using that broker commission percentage for charges that are a part of the BR revenue. Anything under a different pay code is treated like a regular adjustment. So, say for instance, the toll charge here was under dispute and it was overbilled by $50. We're going to get our driver pay by taking their pay and dividing it by the revenue to get the percent that they were paid. We'll also do the same for our agent, just like we would do any other adjustment. And then we will use those amounts, those percents that we just got to determine that deduction amount. So we would times 79% by $50 to get what the driver would be deducted. And then we would do the same 21% times $50 to get the agent's deduction. So that is something to keep in mind when you're doing mixed commission adjustments. Only things under that BR pay code are deducted or paid out using that broker commission. Anything outside of that pay code is treated like a regular load, but that's why it's a mixed commission because we have a combination of agents pay, a carrier's pay, and drivers being paid all on one load. So it's very important that you're paying attention to your pay codes. You're checking to see who received what, whether you're using the agent settlement inquiry, the tractor settlement inquiry, or agent portal. Make sure you are deducting the right parties and you're using the right amounts. So I wanted to take the time to go over this deduction you can see listed here in the agent's commission column. Because I get this question a lot, I figured it would be a great time to put it in this webinar, especially because I saw it in one of the examples we went over earlier in this video. So anytime you see an agent deduction right here with no notes, this is because the agent has paid out the driver more than their contracted rate. And you're thinking, what do you mean their contracted rate? Those are the rates that we were looking at on the agent's commission pay table. So if you can see here, this agent for this refill fuel keyword, they are allotted to pay out at 100% of the revenue. So if we come back and we look at this line item, we can see the revenue was only 62.75. And if their payout is 100%, that driver should have only been paid 62.75, but they were paid $250. So they went over that 100% contracted rate. So anytime an agent pays a party more than their contracted rate, they will be deducted for it. And figuring out that deduction amount is pretty simple because we know it's at 100%. So anything over 100% of what they paid, the agent will be deducted 100% of that. So we could take the revenue for the reefer fuel here, which was 62.75. We're going to subtract the driver pay listed, which was 250, and that equals the agent's deduction amount. So they were deducted the difference at 100% because that is their pay code. If their pay code for this line item was 85%, they would have been deducted for 85 of what they billed over instead of 100. But in this case, their pay percent is 100%, so they were deducted 100% of the difference of what they paid over their contracted rate of 100% of the revenue. Let's go over some key takeaways because I know that was a lot of information to take in, but here's some things that you want to make sure you are remembering and noting when you are doing adjustments on brokered loads. Always get approval from the agent before deducting a carrier or driver. Remember, agent's commission is paid on a margin when calculating adjustments. Be sure to check the agent and tractor settlements inquiry when calculating mixed commission adjustments, especially when drivers are involved, because that tractor settlement inquiry is going to tell you which driver received what and how much, and you don't get that information if you're just looking at the agent settlement inquiry. So make sure you're not forgetting to verify your tractor's pay if you're making adjustments to their commission. Make sure you're using the commission pay tables to ensure you're using the correct percent for the agent in that line item. Because, like we stated before, those broker percent commission rates are contracted. So every agent is not paid the same. So even though you might run across 10 that pay at 60%, that 11th time you're going to get one that gets a little bit more money, and you want to make sure you're adjusting those invoices correctly. And last, please remember that agents do not share in the loss on brokered moves. Never deduct the agent more than they were paid. And thank you for taking the time to watch this webinar on calculating broker commission. I know it's a little longer than most of them, but it was kind of hard to get all the information down. I didn't want to leave anything out. I wanted to try to make sure I gave great examples. Um, if you've been here at Evans, you know no adjustment is like the other. So sometimes you may log into EBH and you might see something weird or think, oh, she didn't cover that in the video. And it's unfortunately, I can't cover every scenario, but the math is still the same. You're still using the same formulas to determine what these breakdowns are. So if anytime you have any questions, if you want to jump on a phone call or Teams me or come by my desk because you're getting ready to do your first broker commission adjustment and you're just unsure if you're doing it right, I am always here and happy to help. So don't feel like it is a bother to me. Please come by, ask your questions. We can work it together because it will take time to get used to. You have to do them often for it to stick in your head. But if you remember, for the most part, the deduction process is just like any other load. You just have to remember to calculate the agent's margin first. So that's the only different step when you're working with broker commission is remembering that portion of it. So again, like I said, thank you for joining. If you have any questions, let me know. And after the video, please make sure you click the link in the description to take a short quiz. Have a great day.